I'm super excited to be joined with Saman Habibi today. I'm doing a couple of flips myself, and I've noticed that the market's been picking back up in Windsor. I assume it's very similar in Durham.
So let's just jump right into it. First, what I want to talk about is the Durham region, and I want to talk about month-over-month data. Here, what I have displayed is essentially all the municipalities and towns in the Durham region. And essentially the message here is that on a month-over-month basis, we are starting to see an increase in median price. So pause this, take a picture, and I think this really summarizes what's going on in the Durham region. Durham region remains to be the most affordable region in the GTA. To the right, we have Oshawa. The median price in Oshawa was $775,000. Guys, let's just take a look at what's happening in the GTA. And if you're a first-time homebuyer, if you're an investor, you need to be focusing in the Durham region and specifically in Oshawa because there is a big affordability factor.
Hey everyone, thanks for joining us. My name is Austin Yeh. I'm a full-time real estate investor and a wholesaler as well. I have 25 real estate properties and I am also actively fixing and flipping properties. I'm super excited to be joined with Saman Habibi today. Saman, how's it going, my man?
Austin, thanks for having me. It's going well. Market's busy, as you know, and I'm just happy to share some data with people today.
It is crazy how quickly things have picked back up. Every time the real estate market, the Canadian real estate market is tested, it feels like it's only for about 12 months. And then every January or February, there's an uptick again. So it'd be interesting to jump into the stats because I'm doing a couple of flips myself. And I've noticed that the market's been picking back up in Windsor as well. So I assume it's very similar in Durham.
Yeah, exactly. I would say it's very similar. I feel like we have a perfect cycle here in GTA in Ontario. And essentially we're in the spring market right now and we're going to ride up. And then towards the end of the year, we're going to slow down and that cycle essentially repeats and repeats. So to your point, the 12 months is absolutely right. Sprinkle a little bit of interest rate hikes in there and it really, has a damper on it until they put brakes on the interest rates, which we've seen. And I think as a result of the pause and the outlook of what's going to happen with the Bank of Canada interest rates and inflation, it looks like people are starting to become more bullish because we're seeing the activity, rise tremendously.
Yeah, I feel like a lot of Canadians they're always super bullish on real estate in specific. I've noticed that when the first 25 basis points came, there's a little bit of a pause in investor demand. But as soon as there was certainty around rates not going up, or there was a certainty about how far rates were going to go, a lot of home buyers just jump back in. I'm excited to jump into the data. I know that you have a presentation ready for us, so why don't we get into that?
That's right. Let's jump right into the presentation. Awesome. Just to give you an idea of what we're going to talk about. So first we'll talk about the Durham region. We'll go through pretty much all the towns and municipalities in the Durham region, look at what's been happening year over year, month over month. I'll give you my key observations as to, what I'm seeing high level. And this is, boots on ground information. And then we have a little brief message to anyone who's a first-time home buyer looking to get into the market. We're going to talk about what is the best bang for your buck. And if you make it to this stage, we're going to be talking about investment properties and what it's like buying an investment property in the Durham region, as of March 2023. We'll talk about some rental data for the investors out there, and then we'll just talk about, who you hire throughout your transaction and, what that means for you.
Awesome.
So, before we spoke about this quickly, but I just wanted to quickly highlight, what's going on with the Canadian interest rate environment. So we know that in March 2023, the Bank of Canada announced that it's going to hold the key interest rate at 4.5%. The next announcement is scheduled for April 12th, and the expectation and what's been built into the market is a pause, but the message was very aggressive in the sense that they're going to remain very cautious, and and they are ready to increase the interest rates if necessary. So what this would mean is that we would expect the fixed rates to decline in the near future and the variable rates to remain stable. What that tells me as an investor, and to yourself and to all our investor clients, is that don't speculate on the risk of interest rates in your performance when you're running numbers and when you're trying to, look into the future when you're going to do a refinance. You really can't be taking an aggressive approach here with the interest rates. I would say, in the past, we've been very fortunate where, you could buy any investment property, you can make all the mistakes in the book, but then at the end of it, you're going to look like a superhero because of the appreciation factor. But when you're dealing with interest rates and when it's not in your control, it's a big gamble. So I would say, if you're going to take any message away from here, is that don't speculate on the interest rate dropping tremendously in the future months. Austin, how are you kind of playing out your performance when I guess you're doing flips, but do you have any projects where you have to do a refinance? And if so, what's your approach to the interest rates?
Yeah, exactly. I'm not speculating on interest. If anything, I'm underwriting for higher interest rates. And I think that's how investors should go about it. But I heard that you mentioned this in a previous update as well. And I totally agree. Over the long term, rates are going to settle back to a lower level, right? So over the long term, you have to be aware that you might not be super positive today in cash flow, but as long as you're neutral, that's fine. But in maybe a year, 2 or 3 years out, that asset is going to be cash flow positive once again. It's just hard to make anything super cash flow positive in today's rate environment.
Absolutely, I agree. And the conversation that I've been having with a lot of investors is that, hey, send me the numbers. I send them the numbers and they don't look attractive today. And and essentially the talking point there is that, no investment property in the GTA is going to make financial sense today if you're strictly looking at cash flow. If that's important to you, then, great. Cash flow doesn't work. If that's important to you, move on. But if you don't necessarily need the cash flow and you have the ability to carry these properties and not, draw yourself too thin, then if you're forward looking, then yes, you can assume that interest rates are going to be at normal levels. And when I say normal levels, I've been telling my clients around 3.754%, I think is more of an accurate figure and not the 1 to 2%. So if you can take on that risk, then that's a different conversation. And, I'm always happy to have one-on-one conversations with people to really determine what their risk tolerance is. So let's just jump right into it. First, what I want to talk about is the Durham region, and I want to talk about month-over-month data. This doesn't really get a lot of conversation because essentially what we hear in the news is year over year. We're going to get to that. But first, let's talk about month over month. Here, what I have displayed is essentially all the municipalities and towns in the Durham region. We have Ajax, Brock, Clarington, Oshawa, Pickering, Scugog, Uxbridge, Whitby. And essentially the message here is that on a month-over-month basis, we are starting to see an increase in median price. So here I'm just looking at median prices. When we look at this chart, I would say there's a couple areas that I wouldn't really take too serious in terms of the aggressive sales price increase. Uxbridge and Brock, and essentially even the Scugog area, we can kind of ignore those big jumps because in terms of the number of volumes that we see, it's very low. So it's very often here that you will see, for example, if you look at Uxbridge in February, the median price was $1,080,000. In March, it's 1.345. And that's because of these areas. These areas have a lot of bigger homes. It's not a large range of homes, but there's going to be big differences in homes. So that's causing a lot of the outliers. But if we take a look at some of the other areas that are more traditional, your Clarington, Oshawa, Whitby, Pickering, it's around, the single digit increases. And I would say this, to me, in my opinion, the anecdotal evidence that I see is that Durham region still remains to be very affordable when we compare it to the rest of the GTA.
Awesome. It's interesting to see actually from a month over month perspective, we're seeing like 2% increase in some places. And again, this is month over month, right? So you extrapolate that, not saying that we should extrapolate it. You're talking about like 24% increase. So things are definitely picking back up. It seems to match up a lot with what a lot of realtors are saying, boots on the ground.
Yeah, absolutely. And I mean, I think realtors have a bad rep for just always being bullish, because of the incentive tied to the market. But I'm going to show you a chart later on that really shows what's been going on since July. And the story is very clear. It has nothing to do with realtors, pumping the market. It's just the data and what the data shows. I I want to talk about year over year because this is what we see in the news. And I think, we have to be very cautious with what we see in the news because, just because it makes headlines doesn't necessarily mean that it reflects what's going on in the market. In my opinion, month over month right now paints a better picture, but it is still important to kind of take a look at what's been happening year over year. Of course, as we know, March 2022, that's when the interest rates started to increase. And as a result, we were at the peak of the market. And since we're starting to see a pullback. So I do always want to point out to people that, Durham did get to a point where prices were very aggressive. It didn't really make sense. I think what this graph or what these numbers are trying to show is that there has been a correction in the Durham region. Durham region went up at, very, very high during the peak, but it has also corrected the largest in terms of the GTA. So I still think that there's value right now, and especially coupled with the correction in the market, I think that numbers are where they're supposed to be, and there's a lot of good opportunities that we see in the area.
Awesome. One quick thing that I noted is that the volume has dropped off quite considerably. Now,
Yeah.
I'm not sure if you're going to get into that later, but is that a result of lack of listings or is that a result of less demand?
Yeah, I mean, yeah, let's just talk about it now. I would say that it's the mindset of the seller. When you look at people who are in trouble, I would say right now people who are in trouble are ones who made purchases at the peak. People essentially know that real estate, or it's a known fact that real estate is the last thing that someone will give up in terms of their financial commitment. Credit cards can go, car payments can go, credit cards can go, housing remains, people hold on to it for a very long period of time. And I think, it has to do with what we've been told and what we've been conditioned to believe in Canada when it comes to real estate. We've been conditioned to believe that interest rates will always come down and prices will always go up and you'll never lose on real estate. So, there's a sense of ownership here. A lot of people who are in a tough situation are just waiting for interest rates to come down. So they're holding on to dear life. People are trying to test the market, get volumes out to the market. They're not necessarily getting the price that they want, and they're not going to take a 30% cut on their purchase price. So they're holding on. So it has to do with a bit of everything, and also coupled with, again, the interest rate environment as well. Even when you get your property out to market, in order for people to qualify, it's becoming difficult as well. So I'd say there's a couple of factors, but I know that right now, the only thing that really matters in terms of prices being corrected is supply, because as we know that, prices are determined based on supply and demand. Demand in Canada has always been high, and it will continue to be high because of a lot of different factors, one being immigration, but supply has always been on the short end and has always been a difficulty for us. So I find that if we don't get supply, prices aren't really going to correct or come down further. And we'll get into months of inventory in future slides. But yes, you're right. Volumes are down significantly, and people are not putting their homes up for sale as aggressively as they have in the past.
Mm-hmm. Before we jump into the next slide, one point you made there that I want to talk about with my own anecdotal experience is that sellers are fixated on a higher price a lot of the time, and that really restricts listings from coming out. I went down to Belleville yesterday to speak with the seller, and I shared it on my Instagram story, but they were trying to convince me that a bungalow in Belleville will be $1 million after repair value, which isn't going to be the case. Visited another seller, exact same situation. So we have to almost think from the perspective of an average individual and take ourselves away from the investor mindset, because most people who own houses are your everyday mom and pop, right? They're not investors, so they think differently than us. But anyways, I guess we'll jump on to the next slide.
Yeah, absolutely. No, I think you're right. We see it too. I see it when I go into listing presentations. A key factor for me when I go into listing presentations is if the seller really understands my pricing strategy, then it's going to be a very smooth transaction. But if they have expectations from 2022, then it's going to be a very hard sell for me and even for them. So you're right. Like that, having that understanding of the market is very key right now, and it's tough when people don't understand what's going on. So I wanted to give you just like my, if people want to pause this, take a picture, and I think this really summarizes what's going on in the Durham region. And we'll just go through these one by one and talk about it. So in my opinion, Durham region remains to be the most affordable region in the GTA. What I do here is I have a picture that kind of highlights some different areas in the GTA. And to the right, we have Oshawa. The median price in Oshawa was $775,000 as of March 2023. We go further west. We have Scarborough, valued at around $850,000. I do just want to point out that this is all type of homes, not just detached. It's going to include detached semis, townhouses, condo apartments, and condo townhouses. That's why someone will look at Toronto and say, well, Toronto's worth a lot more. I would say, yes, when you look at freehold, it is worth a lot more, but we're just looking at everything. And as we go through essentially across the Lake Ontario, we have Mississauga at 916, Oakville at 1.3, Burlington at 945, going up north, Brampton 974, and Vaughan 1.388. So essentially what I'm trying to point out here is that, let's just take a look at what's happening in the GTA. And if you're a first-time homebuyer, if you're an investor, you need to be focusing in the Durham region and specifically in Oshawa, because there is a big affordability factor. And essentially the next town over, there's a $70,000 price difference between Oshawa and Scarborough. And I may be biased, but if I was to take someone in Scarborough and drop them in any essentially subdivision in Oshawa, I don't think you would really realize the difference in terms of the neighborhood styles. But of course, you are closer to Toronto, and there's going to be a premium there. So take it as you will. Yes, so the other points that I wanted to talk about was that most municipalities have maintained or increased value since July of 2022. Pickering, Whitby, Ajax, Oshawa, Clarington. There's always been this conversation of have we hit rock bottom in terms of prices. I mean, if you look at the data, ever since July, prices have maintained or kind of grinded sideways. So I don't know if we've hit bottom, but I can tell you that we've been flat for the last 8-9 months. Durham region Durham region currently has 1.5 months of inventory. Again, lowest in the GTA. What this means is that it remains to be a seller's market. So if you've got a property right now that you want to, whether it's an investment property in your portfolio that doesn't really make sense, you're being stretched thin based on cash flow, and it just doesn't make sense for you to hold on. This is the time to sell, because this is when you're going to get a premium for it. If you have a house that you want to downsize from, this is the time to sell. And essentially, the 1.5 months of inventory has allowed for prices to plateau or increase. Average days on market is starting to decline. So at the peak of the market, we were seeing just when it was starting to correct after the peak, the average days on market was around 22 days. That has come down to 13. What that tells me is that there are a lot of buyers out there, and homes are not lasting very long on the market. They typically sit on the market for 7 days. Most of them, 58% of them, sell right away. And the ones that are not as desirable will stay a bit longer, but they do get scooped up. Multiple offer scenarios are back. So in the Durham region, in the month of March, 58% of all listings were selling above asking price. So again, what that tells me and what you need to understand is that what you see on realtor.ca in terms of listing price doesn't mean anything, because everything is typically 20% listed below fair market value. And the last thing that I'll talk about, and then we can go back and forth, Austin, is sold over asking. Average sales to list price ratio is 104%. So again, this points to the fact that realtors out there are pricing properties very low in order to create multiple offers and in order to have a higher price.
Yeah, a lot of interesting data there. Thanks for sharing it. What I'm curious to know is that, as you mentioned, things are back in multiple offers. There are a lot of listings in the summertime that were kind of stale and sitting there. Have you noticed that they've been selling over the past couple of months going into 2023?
Not necessarily, because a lot of those stale listings, once they went stale and once they expired, we start to see an increase in supply for the rental market. So, it's safe to assume that some of those people who couldn't get the sale either, were living them themselves and will continue to live there, or they just put it on the rental market. And as you know, once you have tenants in there, it's pretty difficult to get them out in the event of a sale. So, not all of them have come back to market. I would say, in fact, majority of them have not and are still on the rental market, because when we look at the rental side, the supply has increased tremendously.
Interesting. Would you say that there's potentially an opportunity there for people to work with a realtor like yourself who may be able to get those expired listings and see if those people may still be interested in selling. Because as we know, sellers are slow to catch up on the data, right? They already tested the market. They didn't get what they wanted, but now the market's picked up.
Absolutely. It's actually one of the things I do on a weekly basis. I essentially pull up every single lease listing that's in the Durham region. I start filtering by days on market, and anything that's been on the market for a while, I'm emailing the agents and saying, hey, is your client looking to sell the property? Unfortunately, it's not as promising as it may sound to be. It sounds like a great strategy, but once I do this and once I start looking at these properties, you start to see that these properties were typically bought at the peak of the market, and now they were bought for bungalows for $1,050,000, $1,071,000, and now they're worth maybe $800K. I don't think sellers are just ready to let go of these properties just yet. So it is a very good idea to target these expired listings, and I do it. But the success rate has not been as high.
Fair enough. And over here again, talking about listing selling over asking price, are people going non-conditions again, or they're still inspection and financing?
Yeah, it's a great point you bring up, Austin. If you asked me this 2 weeks ago, I would have said we'll put in any conditions that that you guys want. But now it's a completely different ball game. So there's been a very fast shift in the market in the last 2 weeks, I would say. We have gone from seeing, 1 or 2 offers on properties to now seeing 20, 30, even 40 offers on properties. And once once it gets that aggressive, you're really not going to win a property with conditions. So I would say, yes, it has worsened for the buyer, and you have to be, you need to have your ducks in a row in terms of financing and having comfort over the inspection.
Interesting. Gotcha. It's crazy again, like how quickly things can shift over time.
Exactly. A matter of 2 weeks, I would say. It's changed that much. So this is the chart I wanted to show you, Austin. And essentially what we're doing is we're looking at the Durham region, and we're looking at the different municipalities. And if you can see my mouse, essentially this is July 2022. And if we kind of look outwards towards March 2023, most municipalities have been flat, with the exception of Pickering. Pickering's had more up and downs, and this is very understandable due to the type of properties that are in Pickering. It's safe to go into a subdivision. You're going to see 3 bungalows, and then you're going to see a 5,000 square foot custom built. So there you expect to see ups and downs. But essentially the message I'm trying to get across here is that there's always been a conversation of have we bottomed out? I don't know. When I look at the data, we've just been flat for 9 months now. And if you start looking at the way that the line graphs are going, they're starting to point up. Although this is happening because of low volumes right now, but in a few weeks, we'll have a better understanding as to what's going on in the market.
And by that point there, do you, when you said in a few weeks, we'll have a better understanding of what goes on in the market, are you expecting more listings to come on the market? Is that kind of what you're referring to?
I'm more so referring to from a price perspective. Right now we're at 1.5 months of inventory. Even if we had double the inventory come to market, we'll still be in a seller's market. So I don't think that's going to have that much of an impact on price, on price coming down or staying stable. So due to the lack of inventory and essentially heading to the spring market, I'm already starting to see numbers start to creep up a bit. So when I say pointing up, I would say I'm expecting prices to continue increasing month over month.
One interesting thing to note on this chart is that we see February and March during the first rate hike again, as we alluded to earlier, people hit the panic button. And even myself as an investor, there's so much uncertainty and gray area out there. No one wants to make a move. So, when Warren Buffett says it's the best time to invest when it's when there's uncertainty in the market, or paraphrasing, but that literally is what the data shows. Is that as soon as the first rate hike came, huge decline in your sales price. And then when there's more certainty, but still rate hikes in the summer, because there's still rate hikes in the summer, your prices still were not impacted drastically. And now we're at a higher rate environment than we were in the summer, and prices are actually increasing again.
Yeah, exactly. It's weird. It's weird how the mindset works here. The one thing, some of the conversations that I've had with other people is that we have a lot of immigration come to Canada, and and when you look at some of the regions that the immigrants come from, real estate has been a very prominent thing for these immigrants, right? Like you look at what happens in the Middle East and in Asia, there's a lot of ownership of real estate. And I think that essentially follows and comes to Canada. That mindset does, at least. And, unfortunately, there is some, the F word that we don't like to use. There's a lot of fraud that happens, unfortunately. And, it does allow people to get into the market. So I feel like there's a lot going on as to why we're kind of seeing this mindset of people still being in the market and still shopping around. But I guess shelter, people still need shelter at the end of the day. I heard someone posted something really cool today and said that, a lot of people invest in mutual funds, a lot of people invest in the stock market, but unfortunately you can't sleep in your stocks or in your mutual funds. So at the end of the day, you do need a house. And I think we are seeing the effects of that.
Yeah, good point.
Awesome. First-time home buyers. Again, I've alluded to the point that as a first-time home buyer, you should be looking at the Durham region. It's a great place to start your search. You can connect with someone like myself who knows the area, who has grown up here, went to school here, works in the area. Someone who can educate you on what's going on. It's affordable and it's accessible. So from an accessibility perspective, if you do work downtown, and you need to get from the East End to downtown, I have some numbers here to kind of show what the distance is. So 25-minute GO train ride from Pickering to Union Station, 35 minutes from Ajax, 45 minutes from Whitby, and 55 minutes from Oshawa. Essentially, what I tell people is that I did the commute from Whitby to downtown, from Whitby to Newmarket. It always took me door to door around, when I was driving, it took me door to door to Union around an hour 30 and to Newmarket around an hour 10 or an hour 15. It's essentially the same thing with the GO train, maybe even slightly faster, and you don't have necessarily traffic. So it is something to keep in mind. In terms of, green space and recreational things to do, there's more than 350 kilometers of recreational trails throughout the Durham region. So there's a lot of conservation parks where, there's ponds, there's trails, there's wildlife that you can go and see. Population is expected to double by 2051. What that tells me is that population growth leads to more investment in infrastructure. So we know that in the Durham region, the GO train line is expanding. So currently the GO train line ends in Oshawa. There's going to be 2 additional stops in Oshawa and 1 in Bowmanville. There's a super hospital coming to Whitby. It's supposed to essentially alleviate some of the traffic in terms of hospital care that goes into downtown. We have the 401 and the 400 series expansions. We have the 401, 407, 412, 418. So there's a lot of, we know that OPG is in the Durham region as well, and they're moving headquarters to Oshawa. So the population growth is going to lead to more investment in infrastructure. As infrastructure grows, we essentially see more price appreciation in prices because more people come to the Durham region. And based on the population, that is going to be the case, and we're already seeing it as we speak.
Mm-hmm.
What I wanted to kind of show first-time home buyers was, again, this chart, which kind of looks at the different types of homes. If you're a first-time home buyer, you're typically going to be looking at a townhouse, condominium, apartment, condominium, townhouse, detached, and semi-detached. What I want to show you here is that since July to March, what I've done in the far right, I've kind of shown you how prices have moved since July till now at the different type of homes. And as you can see, the semi-detached properties have increased the most at 11%. What I want to tell people, and the message I want to get across to people here, is that if you want to look at a freehold house, you're limited to a detached property, a semi-detached property, and a townhouse. And I would say that right now, the best bang for your buck is going to be the semi-detached property for 2 reasons, for 2 main reasons, in my opinion. From a lifestyle perspective, you're only sharing one wall with another owner, versus in a townhouse you have 2 walls, which means if you're sharing 2 walls, you really need to make sure that both your neighbors are quiet neighbors, so you can have a peaceful enjoyment to your life. With a semi-detached property, you're only sharing 1 wall. And because there's a lot more townhomes being constructed in the Durham region, they're newer built, and as a result, they trade at a premium. And that has really caused price for townhomes to increase, whereas semi-detached properties, they don't get built as much. They are a bit older, but most of them do have the ability to add a income suite into the basement. So if you're looking to essentially reduce some of your mortgage commitment, a semi-detached would be a great property because you're typically going to have 2 floors of living space for yourself plus a basement. If you don't need the basement, you often have a separate entrance into the basement where you can create an income producing unit and get some rent in order to help you with your mortgage costs.
A lot of good points. Is that what I'm seeing, that the townhouses are, the prices are higher than the semi-detached?
Yeah, exactly.
Interesting. And
Yeah,
I noticed that the gap between semi-detached and detached back during the peak was massive, right?
yeah,
So
exactly.
less movement in semi-detached overall, which is good.
Yeah. And then and then if you do have a very tight budget and you're around 500-600K, and it's very simple, you essentially would only be focusing in on the condo apartments. What's neat about the Durham region is that there are newer condo apartments where they're not high rises, they're mid rises. So there's typically 3 to 6 floors. There's a really cool complex in Bowmanville that has a lot of first time home buyers in the area. So that it's a very young area. And in that area, you do have a lot of condo apartments in the 500 to 600K range, some even lower depending on the number of bedrooms. So there are options for essentially anyone who's interested.
Yeah, I think to your point, it's, oh, actually it looks like you were getting into it, like the 2 units. I was gonna say, as a first time home buyer,
Yeah,
getting into detached or semi-detached makes so much sense, especially with current rates. One of
yeah,
the, for myself, I live in Toronto. I'm selling off a condo in Toronto, and I'm
yeah.
looking at entering the detached market because it's
Mhm.
actually cheaper to have a detached property than it is a condo when you're house hacking, which is mind blowing.
Yeah. Austin, I find that people don't, the concept of house hacking has really helped a lot of people get, be a bit more free in terms of not allocating so much of your income to your mortgage expense or to a liability. Unfortunately, some people, want that glamour of living alone, living downtown, living in a high rise, and that comes at a cost. And unfortunately, one of the costs is you're going to be maxed out, and you're not going to really have the ability to house hack or bring in some income. But so yeah, to your point, if someone wants to get ahead in life, it is a good step to take.
hmm
So yeah, exactly. So let's talk about turnkey duplex options and 2023. So the purchase of a 2-unit legal duplex has dropped by approximately 20% since the peak. So in February of 2022, the median price for a duplex was anywhere between $1 million to 1.150. I know there's a big range there, but that's what it was. We were seeing it all over the board, depending on location and condition of the property. In March, it's anywhere between 800,000 to 875,000, so a big discount in my opinion, in this market. Um, Even if you're an investor, it makes sense to purchase a turnkey duplex rather than going into a conversion project. And I'll kind of show you the numbers to really support it. So if you were to purchase a turnkey duplex, let's go on the higher end. You can purchase it. Let's say your purchase price is 870,000. Your initial capital needed, which would be your 20% down payment plus your closing costs of land transfer tax and lawyer fees, you're around $191,000. Monthly rents, you can bring in anywhere between $4,150 a month, and your expenses, including your mortgage, your property tax, insurance, plus your maintenance reserve and vacancy reserve, is going to be $4,774 a month. So it does run you at a negative cash flow of $624. Keep in mind, we're talking about these numbers if you're purchasing it as an investment property, and your monthly expenses do have 2 non-cash items in there. From a return perspective, as we mentioned at the beginning of the video, if you're strictly looking at ROI, it's not amazing because you're running at negative cash flow, and I'm assuming 0% appreciation in my numbers. So if we plug in appreciation, it does make sense, and maybe we can make a case to say that it is feasible to plug in an appreciation number because we are seeing a month over month increase. But again, I've always sold people on being conservative. If it makes conservative and you're comfortable with it, then in actuality, the number should be even better. So, this is kind of, what it is, right? So if you are going to be house hacking, then of course your expense would be reduced because again, some of that mortgage expense is alleviated.
hmm Yeah, and just to kind of go off of that, there are ways to increase that cash flow number, right? Such as managing the property yourself.
Yeah.
I invest in Windsor. One of my properties have turned cash flow negative because it's on variable, all the rate hikes,
Mhm.
refinance, so on and so forth. And what I did is in the short term, because it's a stabilized asset already, I don't necessarily need a property manager, right? When the tenant calls, I make a couple of calls to, I don't know, handyman, um, someone in
Right.
HVAC, electrician, so on and so forth. And I am actually increasing my cash flow closer towards the net 0 points. And I would do that for a year or two. And when rates drop back, then I can hire the property manager again. Right. So this is the time to bootstrap a bit on your expenses and just know that it's a short term little pain for long term gain.
I agree. I think you're absolutely right. I know that I myself have been caught in the trap of being a really good landlord and essentially saying yes to my tenants when they ask for things. I remember one of my tenants wanted to create a patio, and I said that I would buy the materials for it, and it ended up being $1,000 expense. Um, so now, I'm at a point where I'm not necessarily saying yes to everything, and I'm pretty much saying just hang on, let's wait and see how things go. So to your point, yes, property management is one thing. Saying no to your tenants when they have demands is another. I've even seen some people, when they have tenant turnover, look at the option of doing a short-term rental in one of the units in order to maximize rents. And for anyone investing in the Durham region, I would say that yes, there is demand for short-term rentals because there's a lot of, again, when we look at the workforce, we have OPG, Ontario Tech University, Lakeridge Health, the three biggest employers in the region. They have a lot of workers coming from out of town, and they typically do stay for a week, 2 weeks, and then they leave and then they come back. So if someone's thinking of doing that, there is demand for that as well.
And good question. Student rentals.
Yeah.
Is the rent any different than long term? I assume you're using long term standard family. Student rentals, are you getting any more rent?
I've told my investor clients that if you're looking to have student rentals, Durham region is not or it would be Oshawa because that's where the institutions are. Is not a place to invest because there is a licensing restriction
Mm,
within a parameter of the university and college, and it essentially limits you to the number of bedrooms, and it also has inspections, building and fire inspections that you have to do on an annual and I think one of them is once every 2 years. So there's a lot of control, there's a lot of restriction, and prices don't necessarily come down as much or appreciate as much, and you're limited to your rental income. So student
mhm.
rentals in Oshawa, in my opinion, is a no-go.
Okay,
Yeah.
good to
I
know.
essentially, when someone wants to talk to me about student rentals, we start talking about Peterborough.
Oh, and one last thing, actually, in this analysis, or did you include equity paydown or because that would be
Yes.
another bonus,
Yeah.
actually.
Yeah, exactly. Yes, it,
Okay,
it does include it. Yeah. Yeah.
perfect.
So going back to the comment I made about buying turnkey versus buying a renovated project. So if we look at a turnkey, it's going to cost you 875 to purchase. Your down payment is around 175. No renovation cost. Your initial cash required is 175. In terms of risk, your risk is going to be short-term cash flow due to interest rates. If we look at a project where you're going to do a renovation, the purchase price to purchase is around 720. So your down payment is around 144,000. Typically, a full renovation up down, doing pretty much everything, is around 120,000. So your initial cash required is 264. Now, in terms of your risk, you have the short-term cash flow risk, but you also have the refinance risk because essentially we're not seeing comps exceed the 875, and there isn't a big spread here for you to do a cash out
Mhm,
refinance.
mhm, mhm. Yeah, it's interesting. So it seems like there's a lot more risk to do conversions. How about 3 units? Is that a possibility?
You know what, Austin? It really it depends. If you can, I guess if you find a deal and you create the deal for yourself and it makes sense, then of course you can do it. But on the MLS right now, no, it doesn't.
Mhm, mhm. Interesting. Are things ARVing? Do you know if three legal 3 unit conversions what they're ARVing at?
3 units right now. So I know purpose built is anywhere between a million to 1.2 ish,
Okay.
1.25. That's purpose built.
Mhm.
If we're looking at your traditional 2-story house that you would purchase and then do a rejig in order to make it three, um, the refinance is not as high. So they're typically around, I would say, 875 to 950. And that's because oftentimes they're the legal non-conforming. They often have tenants in them that you have to assume. So they don't necessarily trade at a high premium at the moment.
Interesting. Yeah, and that as the risk factor, the refinancing. When you do a
Yes.
legal conversion, you may not refi at the value. No, that's a good point that you made there.
Yeah. Okay, rental data. I know we've been going on for a while, but rental data, we'll quickly talk about it. If you have a single family house that you're going to rent, the median rent is between $2,700 a month to $3,000 a month. And you know what? I do have some investors who want, very low headache. They want a nice property that's been renovated, that's not necessarily going to cash flow, but they just want to be able to deploy some money. And this is typically, a wealthy individual who isn't going after cash flow. They essentially want to make sure that their cash is in an asset. In those scenarios, you're around $2,700 to $3,000 a month. When we look at the legal 2 units, an upper 3-bedroom is anywhere between $2,200 to $2,400 plus utilities and hydro. Lower 2 units are between $1,700 to $1,900 a month. Lower 1 units between $1,400 to $1,600 a month. So in total, you can hit $4,000 a month to $4,200 a month plus utilities and hydro. And lastly, again, who you hire does matter. You typically want to work with someone who has expertise in the area, who has expertise with resale, with investment properties, and has had some good transactions under their belt to be able to really understand negotiation and what goes into winning an offer. I just wanted to kind of point out, what I do. Been in real estate for 7+ years now. Lived in the Durham region for 18+ years. Have done 50+ homes in the last 2 years, and would be considered a top producer in Ontario. And 90% of my business is local in the Durham region. When you work with me, when we're selling your property, it has high exposure on social media. I do hold myself to a high standard. I am a CA and a CPA. And I do have a full support team behind me in terms of administrative staff, lenders, lawyers, accountants, home inspectors, movers, and so on. So when you work with me, you do get a peace of mind, and pretty much, I will be assisting you throughout the whole process.
Love it. Yeah, I find that's, I always tell real estate investors that one of the toughest things is building a power team. And when you work with a good realtor, a lot of the times they bring the power team over for you, so you don't have to do all of the nitty-gritty work there.
Exactly. When I work with my clients, I tell them right away, you don't need to worry about anything. Your lawyers, your inspectors, everything's ready to go, unless you have someone you want to work with on your own. But if you don't, there's nothing to worry about. It's all taken care of.
Awesome.
And lastly, for anyone who wants to talk about the Durham region, the market, if you want to talk about your specific investment property, what you're going through right now, or if you're looking to get into the market, if you just simply take out your phone, scan this QR code, you're going to be able to connect with me on my socials, but you'll also have a direct access to my calendar link. And if you like, you can book a call with me, no strings attached. We can just quickly chat about what you're doing. You can ask me all your questions you want, and we'll just have a quick conversation.
Amazing. Love it.
Awesome. And that concludes. Thanks, everyone.
Thank you so much, Saman, for jumping into the data. It was very educational, very useful. And if people want to connect with you, how could they best do so?
Yeah, the QR code works well. Otherwise, you can find me on Instagram at Saman Habibi _real estate. I'm also on YouTube, have a YouTube channel, and on Twitter as well. But yeah, happy to connect with anyone who wants to chat.
Awesome. And if you guys want to follow me, you can follow me on Instagram at Austin Yeh 6. Hope you guys enjoyed this, and yeah, keep on following for more great content.